I used to believe something most traders are afraid to say out loud. I try not to use stop loss. Not because I'm reckless. Not because I don't understand risk. But because I was tired of watching the market tap my stop loss like it knew exactly where I placed it. You felt that too, right? You enter a clean setup. Structure is clear. Bias is aligned. Everything makes sense. You set your stop loss just below support, just above resistance, where it should be. Then price spikes. Just enough to hit your stop. And then it goes straight to your original target without you. Like the market waited for you to get out. Like it hunted you. And every time it happened, something inside me tightened. Frustration. Doubt. A quiet anger I couldn't explain. I started staring at my laptop screen longer than I should have, replaying the candle that wicked me out. Zooming in. Zooming out. Trying to prove I wasn't crazy. Why does this keep happening to me? Was I placing my stops wrong? Was my strategy flawed? Or was the market really designed to punish retail traders? The more it happened, the more emotional I became. It wasn't just about money anymore. It was about feeling targeted. Feeling small. Feeling like no matter how disciplined I tried to be, the market always found a way to test me, right at the point where I thought I was safe. So I made a decision that most people would call stupid. I started experimenting. What if I didn't use a stop loss the way everyone told me to? What if the problem wasn't the market hunting my stop? What if the real problem was something deeper? And that question changed everything. 1. The trade that broke my trust. I remember the exact night. It was quiet. Just me, my laptop, and a clean setup forming on the chart. Structure was clear. Liquidity sweep above resistance. Rejection. Momentum shifting down. It was textbook. I entered short. I placed my stop loss just above the recent high. Safe. Logical. Professional. I leaned back in my chair and told myself, this is discipline. Price moved a little in my favor. Just enough to give me hope. Then it pulled back. Slowly. Candle by candle. Not aggressively. Not violently. Just creeping upward like it had all the time in the world. My heart started beating faster. It's fine, I whispered. That's why the stop is there. Then it happened. One sharp wick. It tapped my stop loss by a few points. Closed above it. Trade closed. Loss taken. I stared at the screen, numb. And then, the next candle dropped. Hard. Then another. And another. Straight down. Exactly in the direction I predicted. Exactly to my original target. I didn't celebrate. I didn't feel proud of my analysis. I felt betrayed. Because the market didn't invalidate my idea. It just removed me from it. That wasn't the only time. It kept happening. Clean setup. Logical stop. Quick spike. Stop out. Then price runs perfectly without me. Over and over again. And each time, it felt personal. I started zooming in on the candles, looking for manipulation. Looking for proof that someone bigger knew exactly where retail traders place their stops. Above highs. Below lows. Obvious liquidity. I'd whisper to myself, they know. It felt like the market was engineered to punish caution. Like using a stop loss was painting a target on my back. So one day, I did something different. Same setup. Same structure. Same conviction. But this time, I didn't place a stop loss the usual way. I reduced my lot size instead. I gave the trade more breathing room. Price spiked again. Deeper than before. If I had placed my normal stop, I would have been out. But I stayed in. And then slowly, it turned. Momentum shifted. Sellers stepped in. And price moved cleanly to target. For the first time, I wasn't the one left behind. That's when something inside me started questioning everything I thought I understood about protection, risk, and control. The truth about stop loss that hurt to admit. Here's the part no one wants to hear. The stop loss wasn't killing my account. My position size was. I kept blaming the market. I kept saying, they're hunting my stops. I kept convincing myself that price was engineered to punish retail traders like me. But the painful truth. I was placing my stops where everyone else places them, and risking too much when they got hit. Highs and lows are obvious liquidity. Support and resistance are obvious liquidity. Round numbers. Even more obvious. It's not personal. It's structural. The market doesn't know you. It moves toward liquidity because that's where orders sit. That's where volume is. That's how large players get filled. And guess what sits around those obvious levels? Stop losses. Mine included. The real damage wasn't the stop getting hit. The real damage was risking 3 to 5% per trade and acting surprised when a small sweep wiped out weeks of progress. I wasn't managing risk. I was emotionally reacting to pain. So when I removed my stop loss, what actually changed? Not magic. Not manipulation disappearing. I lowered my lot size. I gave the trade breathing room. I stopped needing the market to be perfect at my exact entry. And suddenly, the same stop hunts became normal pullbacks inside a larger idea. That's when it clicked. A stop loss is not the enemy. A tight stop with oversized risk is. There's a difference between using a stop to define invalidation and using a stop because you're afraid. Most traders don't get stopped out because their idea is wrong. They get stopped out because they want precision without paying for patience. I wanted sniper entries. But I didn't want to endure normal volatility. And volatility is not manipulation. It's the cost of participation. When I sized down and planned wider invalidation levels based on structure, not fear, my equity curve stopped bleeding from death by 1,000 cuts. Not because I removed risk. But because I finally respected it. The lesson wasn't, don't use stop loss. The lesson was this. If your stop keeps getting hit, don't ask. Why is the market against me? Ask. Is my risk aligned with reality, or with my ego? The illusion of control versus the reality of risk. There are two versions of me. The first version believed tight stop losses meant discipline. He measured his confidence by how small his stop was. 5 pips. 10 pips. Surgical entries. Clean risk-to-reward screenshots. He wanted perfection. He wanted to be right immediately. If price moved even slightly against him, he felt uncomfortable. Not because the idea was invalid, but because his ego couldn't handle temporary pain. So he placed his stop exactly where it made sense. Right below support. Right above resistance. Right where everyone else would. And when price wicketed him out, he said, "See. The market is hunting me." Then there's the second version. This one stopped trying to look impressive. He stopped chasing the tightest stop. He stopped trying to predict the exact turning point. Instead of asking, how small can my stop be? He asked, where is the trade truly wrong? That question changed the game. The first version wanted control. The second version accepted uncertainty. The first version thought a stop loss was protection. The second version understood that risk management starts before the entry, with position sizing. Here's the hard contrast. Tight stop plus big lot equals emotional roller coaster. Wider invalidation plus smaller lot equals psychological stability. One feels powerful in the beginning. The other feels boring. But trading isn't about feeling powerful. It's about surviving. When I was obsessed with tight stops, I was constantly in fight or flight mode. Every pullback felt like danger. Every wick felt like an attack. When I sized down and allowed the market to breathe, volatility stopped feeling personal. The market didn't change. I did. I realized I wasn't being stopped out because the market was evil. I was being stopped out because I wanted certainty in a system built on probabilities. One version of me needed to be right fast. The other learned to be patient long enough. And that difference is the line between reacting to the market and actually working with it. 2. The war inside my own head. After I started experimenting with not using a tight stop loss, something unexpected happened. The market wasn't the hardest part anymore. I was. The first few trades felt calm. I reduced my lot size. I allowed price to move. I told myself I was thinking long term. But then came that one trade. The one that didn't snap back immediately. Price moved against me, slowly. 5 pips. 10 pips. 20. Normally, I would have already been stopped out. Loss taken. Pain finished. But now, I was still in it. Watching. Waiting. And that waiting felt heavier than any stop loss hit. Because when you use a tight stop, the pain is sharp but quick. It ends fast. You can blame the wick. You can blame liquidity. But when you give a trade room, you sit with uncertainty longer. Every candle feels louder. Every retracement feels deeper. I'd stare at my laptop screen at 2 a.m., asking myself, am I disciplined, or am I just refusing to accept I'm wrong? That question messed with me. Because without a hard stop triggering automatically, responsibility shifts fully onto you. No automatic exit. No system to blame. Just you and your decision. I started doubting my analysis more than ever. Not because it was weak, but because I couldn't hide behind a mechanical stop anymore. If the trade failed, it would be because I held it. If it worked, it would be because I endured it. And that pressure is different. There were nights I hovered over the close button, ready to exit manually. Heart racing. Palms sweating. Part of me wanted relief. Relief from watching floating drawdown. Relief from imagining worst-case scenarios. Relief from thinking, what if this time it doesn't come back? I realized something uncomfortable. Using tight stop losses had protected me from market pain. But it had also protected me from facing my own fear. Now I couldn't escape it. Now I had to sit with it. Every fluctuation tested my conviction. Every pullback whispered doubt. I wasn't fighting the market anymore. I was fighting my impulse to panic. And that battle was far more exhausting than getting wicked out ever was. It was never about the stop. Here's what I started to understand. The stop loss wasn't just a risk management tool. It was emotional relief. When my stop got hit, the pain was sharp, but it was clean. Final. Decided. I didn't have to sit with uncertainty anymore. The platform closed the trade for me. Decision made. Blame assigned. Move on. But when I reduced my size and allowed trades to breathe, something uncomfortable surfaced. There was no instant closure. No dramatic, you're wrong, candle. Just fluctuating uncertainty. And that's where the real psychology lives. Most traders say they hate being stopped out. But what they actually hate is feeling wrong. A tight stop protects the ego. It says, I was right, the market just wicked me. It shifts responsibility outward. But when you widen invalidation and manage risk properly, you can't hide behind that narrative anymore. Now the question becomes, is my idea still valid? Not, did the market hunt me? That shift is subtle, but powerful. Because the brain craves certainty. It wants immediate feedback. Win or loss. Green or red. Right or wrong. A tight stop feeds that need. It gives quick answers. But the market doesn't operate on our emotional timeline. It expands. It compresses. It sweeps liquidity. It breathes. And if your psychology demands precision in an environment built on noise, you'll constantly feel attacked. I realized I wasn't angry at stop losses. I was addicted to control. A tight stop made me feel sharp. Tactical. Smart. But it also made me fragile. Any small movement against me felt like failure. When I reduced my size and gave trade structural space, the market's volatility didn't change. My reaction to it did. Floating drawdown stopped feeling like danger. It became information. Price sweeping a high stopped feeling like manipulation. It became liquidity. The biggest insight. Your risk model shapes your emotions. If you risk too much on a tight idea, you'll live in tension. If you risk small on a broader thesis, you'll think clearer. The market doesn't need to know where your stop is. It only needs to move where orders exist. And your job isn't to outsmart volatility. It's to build a psychological framework strong enough to sit through it without collapsing. 3. The turning point, when I stopped fighting the market. The real shift didn't happen on a winning trade. It happened on a losing one. I had sized down. I had given the setup proper structure. I wasn't using a tight, obvious stop anymore. I felt calm going into it. Price moved against me. Not aggressively. Just steadily. No dramatic wick. No liquidity sweep that I could blame. Just slow invalidation. And for the first time, I didn't feel attacked. I watched the structure break. I watched momentum shift. I watched my thesis slowly become less true. And instead of panicking, instead of waiting and hoping, I closed the trade. Manually. Small loss. Controlled. Intentional. There was no anger. No, they hunted me. No emotional spiral. Just acceptance. That's when I realized the biggest change wasn't about stop-loss placement. It was about ownership. Before, I needed the market to behave in a very specific way, react instantly at my level, respect my line, protect my ego. Now, I allowed it to move freely. If it swept liquidity, fine. If it expanded volatility, fine. If it invalidated me completely, also fine. Because my size was aligned with reality. That alignment created calm. And calm created clarity. I stopped trying to avoid being wrong. I started focusing on staying solvent. I stopped obsessing over sniper entries. I started thinking in probabilities. I stopped asking, how do I avoid getting stopped out? And started asking, how do I survive long enough for my edge to play out? That subtle shift changed everything. Wins felt steady instead of euphoric. Losses felt manageable instead of personal. I wasn't trying to outsmart liquidity anymore. I was working with it. The irony. Once I stopped fearing the stop loss, I started using it better. Not tight and emotional. Not wide and careless. But placed where the idea truly failed, with size small enough that I could think clearly while price moved. And trading finally felt quieter. Not easier. Just quieter. Less drama. Less ego. More structure. That's when I understood. The market was never the enemy. My need to control it was. It was never the stop loss. For a long time, I truly believed the stop loss was the villain in my story. Every time price wicked me out and then ran to target, it felt like proof. Proof that the market knew. Proof that I was being hunted. Proof that using a stop was just volunteering to lose. But the deeper I went into this journey, the more uncomfortable the truth became. The stop loss didn't kill my account. My misunderstanding of risk did. I thought removing tight stops was the breakthrough. But that wasn't it. The breakthrough was understanding why I kept placing them the way I did. I wanted certainty in an uncertain game. I wanted precision in a probabilistic environment. I wanted price to respect my exact level because it made me feel in control. And when it didn't, I blamed manipulation. Here's the realization that hit me hardest. The market doesn't reverse because it hit your stop. It reverses because liquidity was taken and higher time frame participants stepped in. Your stop just happens to be sitting in the same place as everyone else's. Above obvious highs. Below obvious lows. Around clean support and resistance. That's not conspiracy. That's structure. And once I accepted that, I stopped taking it personally. I realized something even deeper. When I used tight stops with big size, I wasn't trading structure. I was trading fear. Fear of losing too much. Fear of being wrong too long. Fear of drawdown. So I forced precision. And the market punished that rigidity. When I adjusted my size and placed invalidation where the idea truly broke, not where it looked nice, my trades felt different. Not because I avoided losses, but because losses made sense. They weren't random spikes anymore. They were genuine invalidations. And that clarity removed the emotional chaos. I stopped thinking, the stop loss is killing my account. And started thinking, my ego was. The stop loss is neutral. It's just a tool. In the wrong hands, it becomes a weapon against your own psychology. In the right framework, it becomes protection, not from the market, but from yourself. That's when everything clicked. It was never about avoiding being stopped out. It was about building a system and a mindset strong enough that getting stopped out no longer felt like betrayal. Trading feels different now. These days, when I open a trade, it feels quieter. There's no dramatic tension in my chest. No silent argument with every candle. No obsession with whether price is a few points away from my stop. I still use stop losses. But I don't place them out of fear anymore. I place them where my idea truly fails. And more importantly, I size my position so that if it gets hit, I can breathe. That changed everything. When price sweeps a high now, I don't immediately think, they're hunting me. I think, liquidity was resting there. When a wick taps my level, I don't feel attacked. I observe. When a trade goes into drawdown, I don't panic. I measure. The market didn't become easier. I just stopped needing it to behave perfectly. That need was exhausting. It kept me staring at my laptop late at night, replaying candles, zooming in and out, trying to prove that I was right and the market was wrong. Now I understand something simple. Being wicked out isn't injustice. It's participation. Sometimes my stop gets hit and price runs without me. That still happens. But instead of anger, there's acceptance. Because my risk is controlled. Because one trade doesn't define me. Because I'm thinking in sequences, not single outcomes. There's a certain peace that comes when you stop trying to outsmart every movement. When you accept that liquidity will be taken. When you accept that volatility is normal. When you accept that you don't need to catch every move to grow an account. Trading became less about prediction. And more about positioning. Less about proving I'm right. And more about staying consistent. The biggest irony. The moment I stopped obsessing over stop losses, they stopped feeling like the enemy. They became part of the structure. Part of the process. Part of the cost of doing business. And now, when I close my laptop after a session, win or loss, I don't carry frustration with me. Just data. Just experience. Just another step forward. Because I finally realized. The goal isn't to avoid getting stopped out. The goal is to trade in a way that keeps your mind steady, your risk controlled, and your edge alive long enough to matter. If this story felt familiar, that's not a coincidence. Most traders won't admit it, but almost everyone has gone through that phase, blaming the stop loss, blaming the wick, blaming the market makers. Staring at the chart on their laptop wondering why price always seems to turn right after they're out. I've been there. And maybe you're there right now. Here's what I want you to take with you after this video. It's not about removing stop losses. It's not about making them tighter. It's not even about making them wider. It's about understanding why you're placing them in the first place. Are you protecting your capital? Or are you protecting your ego? Are you managing risk? Or are you trying to force certainty in a game built on probability? If this shifted your perspective even a little bit, I want to hear from you. Comment below. Have you ever felt like the market hunted your stop? Be honest. Your experience might help someone else realize they're not crazy, they're just learning. And if this gave you clarity, share it with another trader who's frustrated right now. Sometimes one perspective shift is all it takes to change someone's entire journey. I create content like this to mix psychology with real trading experience, not hype, not shortcuts. Just honest lessons from the charts and from the mind behind them. So if you value that kind of content, make sure to like this video. It helps more than you think. Subscribe if you want more story-driven breakdowns about trading psychology, discipline, risk management, and the realities nobody talks about. We're not here to chase signals. We're here to build skill. We're not here to look impressive. We're here to last. And remember, the goal isn't to avoid losses. It's to become the kind of trader who can handle them without losing control. I'll see you in the next one.